Right, morning everyone, thanks for waiting. The ESOS webinar with the Environment Agency's ESOS team. Many people know the basics around ESOS, and today we're not going to go into a lot of detail on what ESOS is, save a quick overview to make sure everyone has a basic level of information. Recently the responsibility changed in terms of who is ultimately accountable for ESOS from DEC to the Environment Agency. So today we have Joe Scully, who's the ESOS project manager at the Environment Agency, and Mark Fishwick, who's an ESOS specialist at the Environment Agency. Joe, take 10 minutes or so to take questions, to give an overview of not only the basics of ESOS, but then what changed since responsibility was passed from DEC to the Environment Agency when the new guidance was issued in February. After that, we're going to take any and all questions relating to ESOS, which will be directly from the Environment Agency, so no one's spin on anything. So please do start sending those in. On a PDF, when I sent a reminder about this session, we'll show you how to raise your hand and ask a question. We'll try and go to the actual phone lines to do that, so that you can put your questions directly. So you will see at the top right-hand side of your screen is a box that says Participants, right top. You click that so that you can make sure you see your own name displayed. Down you'll see only your name there. See your name, next to it you'll see a little hands up icon, or a hand up icon. If you click on that, it'll let us know that you want to ask a question. Do time during the session, and then when it's an appropriate time, I will unmute you. Everyone's muted at the moment just for the purposes of background noise and sound quality. So by raising your hand, you'll let us know that you want to ask a question. I'll come to you and unmute you, and you can ask the question, and then I'll pop you back on mute when the question's over, and we'll go to the next one. Alternatively, you can use the chat or Q&A box. Again, you should see these at the top right-hand side of your screen. If you click on them, they should appear in that right-hand window. You can send things through that basis, and we can I'll put those on your behalf to Jo and her team. And I'll pass you straight over to Jo.
Hi, as Nick said, Jo Scully from the Environment Agency. And I just thought today we'd do a brief overview and then go into some of the clarifications that we've made in the main guidance document. So the first thing to sort of clarify, of course, is who qualifies for ESOS. You qualify if you are determined to be a large undertaking, and a large undertaking is an entity registered in the UK that has at least 250 employees, or has an annual turnover in excess of 50 million euros, which is 38.9 million pounds, and an annual balance sheet total in excess of 43 million euros, which is 33.4 million pounds. You also qualify if you are part of an overseas company which has a UK registered establishment. They have a presence in the UK but not an official UK subsidiary, and if that presence has 250 or more employees paying UK income tax. Equally, you'll also be part of the scheme if you are part of a corporate group which includes an entity which meets either of those criteria above. So in summary, if you do qualify, then there's obviously a number of actions that you have to take. You'll need to assess which sets and activities you're going to have to make sure are compliant with ESOS. That involves working out your total energy consumption and deducing what 90% of that is, and that 90% you need to ensure has been covered by ESOS audits or alternative routes to compliance. So you need to work out what work you've already done which would count towards your compliance. So that could be existing audits that you've completed since the 6th of December 2011, or coverage by display energy certificates, ISO 50001 or Green Deal assessment. You'll be left with any energy supplies within that 90% that haven't been covered already, and so you need to undertake some new ESOS audits, and for those you need analysing data from no more than 24 months ago, so 2 years ago. do this ESOS work, you either need to assign a lead assessor to do it all for you, or just get a lead assessor to review the work that you've done internally. A lead assessor can either be somebody from your organisation who has the necessary competencies to become approved to be a lead assessor, or an external consultant who has become a lead assessor through one of the approved registers, which can be found on the .gov.uk ESOS webpage. Having all your work and had it reviewed by a lead assessor, you need to take the recommendations of your ESOS audit to one or two board-level directors. If you've used an internal lead assessor, you would need to take it to two board-level directors, and both of those would have to review the recommendations and provide you with something in writing to tell you that they had done that. If you've just used an external lead assessor, you would only need to show it to one board-level director. Having got board-level sign-off, you then need to make a submission to the Environment Agency to let us know that you are compliant with the scheme. We will be taking the submissions on behalf of all of the UK regulators. So no matter whether you're based in Scotland, Northern Ireland, Wales or England, you'll log on to the gov.uk page and then click on the link on that page and submit your notification. And we'll take this on behalf of all of the regulators. Once you've done that, basically you will have notified as you are compliant, and you need to then just make sure that you keep evidence to prove that you are compliant. And if we were to audit you, we would obviously request the evidence to prove that you are compliant. You need to make sure that you keep this for at least 8 years after the end of the phase, and that's set out in the ESOS regulations. That sort of very briefly summarises ESOS. I'll just go into a few clarifications that have been made in the latest version of the guidance. These clarifications are based on the fact that we've received quite a number of help desk queries since the original guidance went live, and so that's why we updated those parts in the newer guidance. So firstly, the definition of employee, we've put a lot more information in the guidance on that now, and effectively an employee is anyone with a contract of employment regardless of their hours. So you could have 250 people work 3 hours a week and you would qualify for ESOS. If you have temporary staff that you employ via temp agencies, it's likely that they will be counted as your employees, but we have advised that you do check with your legal team to check exactly what the status of their employment contracts are and whether they indeed have one, or whether you just have a contract with a temp agency, in which case those people would not be your employees. Another we've clarified is the definition of balance sheet total. In summary, that is the aggregate amount shown as assets on your company's balance sheet before deducting current and long-term liabilities. That's important if you're very close to the threshold for qualification, so you need to make sure you have looked at the right figure on your account. We've also clarified that organisations which are registered overseas but have a UK presence will need to comply with ESOS if they have 250 employees based in the UK. And we've also just put a little bit extra information about organisations that are exempt to ensure that it's clear that you are only exempt from ESOS if you are deemed to be a contracting authority, which in summary is the public sector and the organisation that receives the majority of its funding from another contracting authority or is subject to management supervision of the contracting authority, or that contracting authority has the right to appoint or remove the majority of your board members. We've also some information about trusts in ESOS. I'm not going to go into the information on that in this telecom, because it is a very complex area, but if people have any questions on that, then please contact the ESOS help desk, which is ESOS at environment-agency.gov.uk, and we can deal with that on a case-by-case basis. We've also added information about joint ventures. A lot of corporate entities have shares in different joint venture companies. The important thing to understand with joint ventures is that if one party has a controlling interest in that joint venture, either by virtue of holding a majority of the voting rights, being able to appoint or lose the majority of the board members or exercise a dominant influence over that company, then they will be deemed to be the parent of that company, even if they only own 51%, let's say. So if that is the case, then that joint venture will fall under their corporate structure, and if they qualify, then similarly the joint venture will be in ESOS too. If no party has the controlling interest of that joint venture, i.e. it's totally 50-50, let's say, nobody can control it, then that joint venture is a standalone company and it assesses itself whether it qualifies, and if it does, it participates on its own and submits its own notification. So that is the main points to do with qualifications that have been clarified in the new guidance. And just a few points on compliance. We've put a bit extra information about how structural changes affect your compliance with the scheme. So, for instance, if you were to sell an undertaking after the qualification date and you qualified, then that subsidiary will also need to make sure it complies with ESOS, regardless of whether it itself is quite small. That subsidiary can comply with the new owner, the old owner, or on its own. And there's more detail on that in the guidance. If you sell assets, it's treated slightly differently. So if you owned an asset on the qualification date and then you sell that asset before the compliance date, which is the 5th of December 2015, you won't need to include that asset, the energy from that asset, in total energy consumption calculation, and by inference you won't need to audit either. We clarified that where you have energy that is covered by a display energy certificate, Green Deal assessment, or ISO 50001, you will not do any additional work to analyse the energy that's covered by those regimes. They are deemed to be fully compliant. The energy covered by those regimes is deemed to be fully compliant with ESOS, and that can count towards your 90% compliance. We've clarified the generation of energy. Where you generate energy on site yourself, you need to include input fuel in your total energy consumption calculation, but you wouldn't include the energy that you use that generated yourself in that calculation, because we don't want you to count the energy. However, if you chose to include the input fuel within the 90% that you were going to audit, you would then need to make sure you audited the whole site, not only the generation process to find efficiencies in that, but also the use of the energy on site. Back of the new guidance, we've included notification questions so that you know what you're going to be asked to submit when you come to provide your submission. And we've also just clarified the point regarding site visits. There's no requirement to visit every single site. What we want is organisations to take a proportional approach to sample sites based on categorisation of assets into similar assets, and then apply the energy opportunities that they find at one site to similar sites in their portfolio, so that effectively you end up in a position where you can say, if we were to apply these energy saving opportunities at all the assets of this type, then we would be able to save this much money, and it cost us this much money to implement these savings. There's nothing in regulations that states what percentage of site visits you have to do, and what we're looking for is the participants and their lead assessor to justify why the approach that has been taken is reasonable. Just to briefly finish off with, the ESOS notification is available online now, so as soon as you are compliant, you can submit notification to tell us so. You can enter information and then press save, and you'll be entering your email address, and it will send you a unique URL that you can then use to enter at a later date. Don't lose the URL, because otherwise you'll have to start again. And once you've submitted your information, you'll get an email that will summarise all the answers that you've put in. You just need to keep that email in your evidence pack as proof that you have submitted your notification. The notification, we're only going to be asking for very high-level information, and as I say, the questions are in the ESOS guidance, which is available on the .gov.uk webpage, so you'll be able to read those in detail there. But we're not going to be asking you for what your total energy consumption was or what the energy saving opportunities you've identified are. It's very high-level information about your organisation and how you have complied in terms of whether you've done ESOS audits, whether you've been certified to ISO 50001, or whether you've done display energy certificates or green deal assessments. Summarizes everything that I was going to say today, just a whistle-stop tour. So I'll hand back to Nick now so that he can start the question and answer session.
Much. So we've had a couple of questions sent in already. If you have a question that's come out of some of those changes, please do use the chat box to send them in to us, or as I mentioned before, if you make sure that you can see your own name on the list of participants, just below that on the right hand side is a hand icon. If you click on that, it'll let us know that you want to ask a question, and we'll come to you in due course. Just before we get started on that, I would like to issue a very quick poll, and bear with me 2 seconds. Let me load this up, and we'll see how people are intending to comply to ESOS. On the right-hand side of your screen now, you should have just a checkbox questionnaire asking how you're planning on actually approaching ESOS. If you just pick out the one that's most appropriate, then we can come back to that. And in the meantime, I will start with the questions that have been sent in so far. So bear with us a couple of seconds. So, Joe, first question. Is there a specific format I need to maintain my ESOS compliance documentation in for my business and site?
The answer to that is no. We've been on that. We want people to be able to collate the information and data in a way that suits their organisation. And the reason for that is obviously a lot of organisations may already be doing a lot of work on energy management, so we don't want you to have to rehash all your existing documentation just to fit our purposes. As long as you can sort of point to the bits that prove your compliance with ESOS, then that will be sufficient if we choose to audit you.
Thank you very much. What's the difference between a lead assessor and an auditor?
Well, a lead assessor is somebody that has to be approved by one of the approved registers, which you can find on our webpage. And effectively, you'll only be able to become a lead assessor if you've got at least a minimum of 2 years energy auditing and energy management experience, and you can prove that you have the competencies that are set out in the ESI publicly available specification 51215, which is based on the date of compliance for ESOS, obviously 5th of the 12th, 2015. If an individual knows that they have the competencies set out in that specification, they are likely to be able to become a lead assessor, and effectively it's just giving you a tick there, yes, you have that overall energy experience, and you can therefore review an organisation's data for ESOS and assess they have complied with the rules of ESOS. It doesn't stop other individuals from doing work towards ESOS compliance. So an auditor can be anybody. You know, if you've got people internally that you want to collect the data and do quite a lot of the energy analysis, then as long as you can prove to your lead assessor that person has the necessary competencies to the role that they were doing, then that is absolutely fine. So it's down to the companies and their lead assessors to determine who's going to do the work, how it's going to be evaluated, and how they're going to prove to the lead assessor that the people that they've got doing those roles are suitably qualified to do them.
Thank you. I build on that. If I just bring up a second question, you might have picked up part of this, is how are ESOS assessors and auditors calibrated? In other words, are we likely to get similar reports and recommendations from, say, 4 separate auditors? Should the reports be almost identical?
They would be, but of course, this is individuals we're talking about, and every individual has their own skills and experience, so it's not necessarily going to get an exact report from each person, because we haven't specified in exactly what format people have to report back to the companies. It's down to the lead assessors to determine. If you're having a lead assessor do all of your ESOS work for you, we haven't specified a specific format. They have to give you that information back. But also, each lead assessor is going to have their own sort of experience and specialisms. They've got to recognise where they experience and where they don't, and that they're within their right to get additional people in to help if they don't feel they have the necessary expertise to be able to do a particular part of your business. And the whole role of the registers is to approve these people that they've got sort of a baseline energy management background, but as part of that, these individuals are having to sign codes of conduct to say, I'm a professional, I am going to admit when I don't have the skills to do something, I shall get the necessary people in to do it. You can't do it. So it's likely you'll get an exact replica using the same company to do everything. But what I would say is, and we've tried to encourage people to do this in the events that we've been holding recently, is I would definitely encourage every organisation that qualifies for ESOS to make sure that somebody in their organisation has read the ESOS guidance and knows the rules. Because just you might not be an energy expert does not mean that you can't know the rules, and that then helps you to be able to be sure what you're asking your lead assessors to do for you, and to make sure that you've got an idea of whether they are over sort of complicating things or whatever. We want people to make sure that they know scheme themselves, and you don't need to be an energy expert to be able to learn the rules of the scheme.
Thank you very much. Just coming back to the poll that we put out a second ago, it's only a quick straw poll with 20 or so people, but it looks like most people are going through consultancy-led energy audits, a couple of people going internally-led audits, and just one so far plumping for ISO 50001, and still a couple of unsures or no answers. So back to the questions. Do keep them coming in, and I will take another one now. Let me just bring it up. Bear with me seconds. How much work is involved in expanding a full ISO 14001 management system with carbon footprinting to ISO 14064 to a system that could then be audited to ISO 15001?
I'm not an expert on those systems myself, but I do know that when organisations have ISO 14001, they're going to have a lot of the management principles in place. And so if you speak to ISO 50001 accreditation body, they should be able to assist you with what you would need to do to sort of top up, but certainly you'll be in a pretty good position. It just depends on how rigidly your ISO 14001 is and what extra work you've been doing on energy management as part of that, as to whether you're in a good position to be able to quickly get ISO 50001 certification or not. You would need to be certified to ISO 50001 by the compliance deadline to be able to be fully covered by under ESOS via that route. So if you think that there's a doubt as to whether you'd be able to get the accreditation by the 5th of December, then you would need to sort of do ESOS audits to make sure you were compliant phase. But obviously, going forwards, ESOS is a 4-yearly compliance regime. So if you subsequently get ISO 50001 accreditation, you could actually count that for next time. You wouldn't need to do any additional audits next time.
So I'm sure you're bored of mine and Joe's voice, so we're going to go to the phones for a question and to Becky. So Becky, I'm just about to unmute you. Please get your question away.
Okay.
Yep.
Brilliant. Joe, just a quick question. So on the qualification day, a subsidiary to a larger business, on the qualification day, we did have a company with more than 250 employees. As of the middle of January, we don't. We understand that we still have to comply because of the qualification date, but my question is, at the end of the 4 years, is there a new qualification date, and when would that be?
Yeah, so this phase you'll have to comply. But then for next phase, if you just stay as you are and you don't buy any other big companies, and then what you do is you would look at your size on the 31st of December 2018.
Yep.
You don't own, if one of the entities within your group meet the qualification date criteria at that date, you wouldn't qualify for phase 2, so you wouldn't have to do anything by the 5th of December 2019.
Okay. All right, thank
Is that okay,
you.
Becky? Perfect.
Brilliant.
I'll pop
Thank you, Nick.
no problem. Pop you back on mute for the time being. If you have a question there, do bear in mind, make sure your name on the right-hand side, and you should see a little hand button below that. Pop your hand up, and we'll come to you in due course. So back to some of the text questions that have been sent in. ESOS audit costs well exceed the costs of going for ISO 50001 by all accounts. How can the scheme justify these prices versus proposed savings?
The control over the prices that consultants are charging, but what we would advise you to do is make sure that you get several quotes, just like you would for anything else that you are getting people to quote you for. And in line with my previous point about making sure that someone in your organisation knows the rules, make sure you're giving them a tight spec on what you want them to do, because otherwise they could be sort of over quoting you. We've heard in some instances where people have very, very low energy. Obviously the costs might seem excessive, but I think you just need to shop around and make sure that you know exactly what you're asking them to do. And as I say, there's a lot of work that you can probably do internally yourselves in terms of the data collection, and you might even be able to do some of the site visits and analysis yourself, even photos, so that they don't have to go there themselves. It depends what you're asking them to do, to how much they're going to be quoting you. But I say there is a lot of work that you can internally, and if not, you just need to make sure you're totally clear on what you're asking them to do, and you evaluate what they're telling you that they're going to do for your organisation against what the rules are and against the sort of principles that we're outlining in the guidance and our events and chats like this.
Very much. So a couple more questions come in via text. What are the obligations for a UK business with subsidiaries in Europe? Does my data have to cover European sites?
The Energy Opportunity Scheme only covers UK energy. However, you'll need to just be careful and look in those other countries as to, if you own a subsidiary in another country, you'll need to look at how big that is, because that might qualify for the French equivalent or wherever it's based of ESOS. Because ESOS has resulted from the EU Energy Efficiency Directive, each member state has an obligation to implement something on the same lines. Now, each member state has implemented something, and so there are slight differences in how they have implemented it. Some of them haven't actually implemented it yet. So you need to make sure that you look in those other countries that they have any obligations to their own governments. In terms of the UK scheme, you will only include UK energy consumption.
Moving straight on, sorry if I keep firing at these very quick, but we've got quite a lot coming in. How do you deal with electric generated on-site by solar PV? Is it excluded from consumption or minused as an input?
No, it's not minus. You would have to look at the energy that you're using on site from the photovoltaics. Ideally, we'd like you to look at whether those are the best, most efficient Ps, and also then look at the efficiency of the energy that you're using on site, but you would include the energy in your total energy consumption. But ESOS is about identifying efficiencies in energy use and energy generation.
Excellent. Next question, moving back to employees, the 450 limit, is that full-time employees only or an equivalent number of full-time employees?
No, it's not FTEs, it's who has a contract of employment. So if you've got 251 people that have 0 hours contract, you will find because you have 250 employees.
Okay, thank you. A couple of questions around audits have come in, logistics have come in, so I'll try and put these one by one unless I can combine them. Cal asks, most of our outbound logistics is collected by the customer and they pay for it. Is it correct to exclude this from the scope and boundary as it will be included in theirs?
So when you are presuming that you're just getting a subcontractor in to do your logistics for you, and if that's the case, and then they will be responsible for that. If it's their haulage vehicles, their petrol, them that could effectively go on a driving course to drive more energy efficiently or improve the efficiency of their vehicles, so that it would be their responsibility. We are aware that there are some sort of complicated arrangements for how some haulage contracts are set up, and we would really like people to bear in mind whether, when they're determining whether the energy should be theirs or not, is who really has the control over that energy. Is it you and your organisation that could really influence whether those vehicles were more energy efficient, or whether the drivers have to go on an energy efficient driving course? And what we want for people to look at this strategically and think, how could we save money for the business, and where do we have the control to implement those savings ideally?
Do remember, you can click on the participants to make sure that your name is shown, and underneath your name, a little bit down, you'll see a hand icon if you want to raise your hand to put a question directly to Joe. If not, use the Q&A or the chat box to send your questions in, and I'll keep voicing them on your behalf. Probably more effective if you put them in, but I'm happy to do so and keep doing so. So moving on to the next question. Why isn't including actions on the opportunity part of ESOS? And a build on that is, if the same opportunities are found next year when we do the audits, or in the next period, will I be penalised?
There is that. The EU directive, which required the UK to implement something, doesn't say you have to mandate the implementation of the requirements, and the UK government didn't want to violate the regulations. However, the fact that the directors have to see the recommendations of the audits, it is hoped that these will be so compelling that they will off the back decide to make these energy investments. And I mean, another thing is obviously that the government don't want dictating which opportunities they have to go for and which they don't, because obviously we acknowledge that organisations might have the capital to be able to invest at a certain time, or may have other core priorities. And so effectively we hope that it will just be a self-fulfilling scheme, that the identification of these opportunities will therefore lead to them being implemented without the need for mandating them. As far as we know, there is no intention to mandate the recommendations. The other question of will you be penalised if you amend the same ones next time? Officially, you won't be penalised, but obviously ideally you would be putting those in place, because otherwise you're just telling them that you are wasting money. Phase 2, you do have to analyse the data again, and you do have to use different data, so you have to use more current data for phase 2. So it wouldn't be that you could just literally pull the same report out of the bag. you would have to look into the data and do Ethos audits again, as it might highlight different energy saving opportunities at that time. But made any changes since phase 1, then obviously some of those opportunities will be the same, and that is perfectly acceptable.
Another bit on that, as a result of the audits, asks Claire, is there a specific minimum energy reduction percentage that has to be identified?
Nope. As I said, there's no requirement to implement any of these savings, and it's just any energy saving opportunities that exist to be identified. Obviously, you need to be doing cost-benefit analysis on the energy saving opportunities that you identify. Obviously, you would then recommending the ones that appear to be of benefit to the organisation, but there's no minimum for what you have to be putting forward down to your organisation to choose which ones they then might want to implement or which ones seem to be best for their organisation.
Slightly pessimistic question. What happens if we're late with our submissions?
Officially, obviously, the deadline is the 5th of December 2015, and if you are late, the Environment Agency and the other regulators, Scottish Environment Protection Agency, Natural Resources Wales and Northern Ireland Environment Agency do have the ability to apply penalties. We would like people to comply, and we will be checking those that don't comply to make sure that they do come into compliance, but it is at our discretion whether we apply the penalties that we have within our power to apply.
Working. And Brian asks, we have a small, under a small parent company, there are 2 UK businesses. Can we submit separately and leave out the small parent company, as by itself this wouldn't be in scope? Do all subsidiaries plus the parent need to be aggregated under one submission?
An organisational-based scheme. So one entity, that group qualifies, the whole group qualify. So that parent that might be quite small on its own still qualifies because it's in the same group as a bigger undertaking. So you can't get the parent out of ESOS compliance, but there's several issues in that question. What you do is, if you want, let's say, 3 go their own separate way, they can all 3 do their own audits and their own notifications, that's fine. Or you could get one of the subsidiaries to go off with the parent and the other subsidiary to go off on their own into 2. That's fine, as long as they both still comply and submit notifications, or can all participate as one big group. Where you're splitting into bits, we call that disaggregation, and that's covered in the guidance. So have a look at that as to how that affects you. It's that default organisational groups would all participate together, but as I say, you don't have to, you can disaggregate. The important thing with disaggregating is it doesn't get you out of the scheme. So you need to consider, if you've got that highest parent that is relatively small, you need to look at how that fits into the overall energy consumption of the group, because if that parent uses 10% or less than the whole group, then if you participate all as one group, you wouldn't need to be auditing of that parent, because you could put that within the 10% that you don't need to consider. It'll be counted as complied in your notification because you're saying our total is X and I've audited 90%, which just happens to cover the subsidiary 1 and 2. So basically they just need to consider how it is best to organise themselves based on how much energy that parent uses. Either way, that parent needs to be compliant, whether that's with them as a group or whether off on its own.
Thank you. A question now on, from your sort of position overlooking lots of the ESOS submissions and questions that you see day in, day out. It's an idea approximately the poll that we did earlier, what percentage of people covered by ESOS are choosing to go down the specific route? So roughly what percentage choosing to go ISO 50001 at the moment? What percentage are training in-house auditors, and what percentage are using external auditors or some of the other schemes that you mentioned, like the Green Deal, etc.?
We don't have any statistics on that because obviously we haven't actually got notifications. Got a few, but we've not got the data there to prove that. We'll have that by the time we get to the end, and so we'll be able to say afterwards how many did comply via each route. We have a lot of people saying that they're thinking of ISO 50001. Certainly for phase 2 they are. It's whether or not, as we discussed earlier, they're in a good position to get ISO 50001 quickly enough. As we've said, those that have got ISO 14001 and 9001, etc., are probably in a better position to be able to get it quickly. So it just depends. Recent events, we got the impression that a lot of people at this point were sort of thinking of using an external consultant just because they didn't feel they had the necessary breadth and level of experience internally. But as we encourage them, you can do a lot of work yourselves and then just get an external person in to review it. So, have specific stats on what percentage of the participants are going to be doing each route to compliance.
No problem. So, coming on to something slightly more generic, Cam asks, do you have any tools that are either able to support me convincing senior management of buying into energy efficiency, or to be able to help with forecast savings based on the opportunities that get identified in all of the ESOS audits?
With ESOS audits, you're supposed to be doing lifecycle cost analysis, and by virtue of that should result in you being able to say to your board, it cost us this much over the lifetime of the product compared to this much if we kept the same old ones. So the outcomes or audits should be proof themselves for the directors. It depends how you then present that to your directors, and that's just based on whatever you think will suit the best. But there are, obviously IT type companies out there that are sort of selling, energy management systems and what to collect data and, will be able to help you with data analysis and things. But we, as obviously a government agency, aren't able to promote one company over another in terms of that. So it would just be looking out for what tools are out in the market. But again, obviously you need to make sure that you're happy that they have covered off everything that you need for your ESOS compliance. Don't just rely on, just because it says ESOS on the box, make sure that you know what it's doing and that covers you.
Thank you. To build on that, is it acceptable to use a simple payback model for a project rather than lifecycle costs? Because if the project looks beneficial, the more detailed analysis will surely be done as part of the project development going forwards.
Basically, in the regs, it says lifecycle cost analysis should be used where practical, I think, or practicable. If you are planning not to use it, you need to provide justification in your evidence pack as to why you didn't feel it was reasonable, practical, to do that.
Thank you very much. Moving on to the next one. The cost and implications of being a lead assessor, personally speaking. So if the business is encouraging me or whoever I'm speaking on behalf of to be a lead assessor, what are the implications of that for me personally going once I get trained and do that on behalf of my company?
Well, the implications are that you wouldn't have to employ an external consultant. So overall, I would have thought, obviously, I can't definitively, overall, over the life of ESOS, it should be cheaper for you to become a lead assessor if you already have those skills and experience, and even if you don't yet, to get yourself sort of skilled up and start doing that type of role internally, so that next period you could be.
Personal liability involved, though, if you're actually signing off the audits as a lead assessor?
Officially, compliance ESOS is with the participant. So if we were coming to audit a participant, we would be auditing the participant, not the lead assessor. But lead assessors, if you were using an external lead assessor, for instance, do have vicarious liability, which you would have with any contract with a subcontractor. So if we were to find something wrong and let's say we decided to apply a penalty to you and you felt that that was directly the fault of the leader, it would be down to your organisation to take legal action against the lead assessor in that instance. The regulator would not be taking any action against the lead assessor directly. But in terms of compliance, in general we would be looking to bring you into compliance. So certainly you shouldn't be dissuaded from being an internal lead assessor because of anything like liability. If you've got the necessary skills to be able to get one of those registers already, you're probably should definitely be of a sufficient level to sort of be able to take the types of decisions that we are requiring you to take, and you'll be aware of your own skills and abilities, and you'll be able to appropriately and get in experts on things you don't know about. As long as you can prove to us that you've taken a reasonable approach, then that's going to be fine.
Thank you. Just conscious of time, we've only got a few minutes left, so if you do have a question, do find your name on that right-hand side of the screen, click the hands up button, and we'll come to you very shortly. We've got a few more to get through in the interim, so do that quick if you do have a question. Brian asks, ESOS seems to overlap with the carbon reduction commitment or potentially the climate change levy. Is correct, and is anything being done to try and tie these schemes together?
CRC doesn't require you to actually do audits on the energy, and that's why a new scheme has to be brought in to meet the requirements of the EU directive. Obviously for CRC and climate change agreements, etc., you are collecting energy data, so if you're collecting that data already, you should be in a good position to be able to pull it out of the bag and then perhaps go and do some site audits based on that data. So you can use it towards your compliance, but it obviously, if you've been doing extra work on top of your CRC work, won't automatically just count towards compliance. In terms of the government's sort of plan, there is a review of CRC and ESOS in 2016, and so obviously we don't sort of know what that will yield, but government are aware that there are a number of policies out there now, and who knows, what result as a result of that review.
Thank you. Is there any sort of guidance that you guys have got, even at a broad level, to guide people as to how much an audit should cost for different size of sites or businesses? I think the question's based on the fact that people are still getting quite a large variance between groups for different audits.
Yeah, we don't offer any guidance on costings because obviously we can't be influencing the market. It comes to that question the answer I gave before of making sure that you know the rules and you give them a tight spec, and if you think it's too much, go to someone else, because there's over 600 lead assessors out there at the moment, and some people, yes, have been quoted, so would seem rather large compared to the total energy use, whereas some others seem to have received some good quotes. But it all depends on what you're asking them to do. If you're asking them to scrabble around and try and find your data for you, it's going to take them days and days and days, so it will cost you money. You can do a lot of that upfront work, and you're really just asking them to sort of come in and give you their expert advice. Then obviously you need to bear in mind sort of typical rates. I mean, we don't really like to comment on typical day rates, but you could get some typical rates from consultants. That would give you an idea of whether the quotes that they're giving you seem realistic in terms of the number of years they're planning to spend on site doing your work for you.
Thank you very much. Just a couple more, so we've only got time for a couple. If you do have a question, now's the time to ask. Other than ISO 50001 and audits, we've heard that the carbon trust standard is a route to compliance. Do you have any Firstly, is this correct? And are you using this? Are there other standards out there, I guess, that would also get you compliance if this is the case?
Well, officially, ISO 50001, Green Deal assessments and display and certificates automatically count as compliance for ESOS. So the energy that is directly covered by any one of those schemes is automatically deemed to be compliant. You don't even need to look any further at that energy. If you've got things like Carbon Trust Standard, they are an automatic compliance route, but you may, if you have done work in those standards that effectively meets the minimum criteria for an ESOS audit, then you can count that as an ESOS audit. So it's semantics, really. If you've done all the work and it meets the minimum ESOS criteria and you happen to have done that via being part of Carbon Trust Standard, then that's fine. You need to take the assessment, or you need to look at what we've done for those standards and assess whether they meet the minimum criteria.
And just one or two last questions. Can our focus on the 90% of our business exclude whole sites in our portfolio?
Yeah. Yeah, we were just saying with the answer before, with that company, you can get rid of a whole company. If that's less than 10%, you can get rid of the whole site, or you get rid of bits and pieces. You can get rid of a bit of fuel on that, a bit of fuel on that side, a bit of fuel on that side. It's however you want to organise it, whatever suits your organisation. It's totally flexible on the 90%, but you would still say that that particular site was compliant because it's counted within your notation, as it were, but you have legitimately counted it within the 10% that you're not going to audit.
Thanks. And a final question to leave us with. When I start to submit my information via the website, is there any key information that I need to hand? For example, company number, how do I identify my company? What's the key stuff I should have in there?
Yeah, as I say, in the guidance at the back in Appendix B, I think is it? Yeah. Appendix B in the guidance, there is all the questions are listed there. So yes, you'll need your company's house number, you'll need your registered company name, you'll need the trading name of the company, you'll need the sector they belong to, you'll need the registered address of the company, you'll need to know what the ultimate overseas parent is called, you need to have if you're going to be the contact for the organisation, you'll need your name, address, postcode, etc. That's the company, where you sit at work, not your personal home address. You'll need to know how many organisations in the group are covered by your notification. You'll need to know whether you've sold an organisation since the qualification date, and you'll need to state whether those are part of this notification or not. You'll need to specify whether you've disaggregated any participants or not. So if you've decided to all go off, like in that example previously, if you've all decided to split into three, then the top parent would need to specify that the other two had gone off on their own. You'll need to specify whether you're covered by ISO 50001 or not. You'll need to specify the details of your lead assessor, and you'll need to break down what percentage of your energy is covered by ISO 50001 display energy certificates, Green Deal energy audits, or included within the de minimis. And you'll need to specify, whether the data you've used sort of met the rules or not, and confirm if it didn't, use publication in your evidence pack for why it didn't. You'll have to include the board level, the board directors sort of sign off and the date that they reviewed the recommendations.
And did you say that's Appendix A or Appendix B in the?
Appendix B in the guidance. Appendix
B in the guidance. There we go. So unless anyone has any last question that they're going to send in, I'll wrap up as we're just approaching 12. Thank you so much to Joe and to Mark for working diligently to pick up all of those questions. What we'll do is we've taken a recording of this session, which we'll turn into a video and put a summary of it back up on 2 Degrees through which area you found this session originally, so you'll get an email about that within the next week or so. If you suddenly put the session down and think of any questions that you really wanted to put but didn't have time to, then please send them to myself and I can field those to Joe on your behalf, and we can get those as included in part of the summary, or if they're more private, let Joe pick those up with you with her team. So thanks ever so much for all the questions that got sent in, and thanks for your time again. And we hope to see you on the next 2 Degrees webinar pretty soon. So thanks again to Joe and Mark, and enjoy the rest of your day, everyone. Take care.